Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Thursday, October 6th, 2022. Before we jump into the charts, I just want to please encourage you to click like each and every time you watch one of our Wicked Stocks YouTube channel videos. We're putting out the daily Tesla report through October. We did it through September. We will be rolling to another stock in November, FYI. And I think I'll just leave it at that. Nothing else to say on that front. Let's take a look at the Tesla charts today. Where to begin? I'm going to start with this chart here. Just a reminder that the market set off a meaningful sell signal on Monday when it gapped clearly below that mid to longer term support that is presently in the mid 260s, 264.98 to 265.60. When that happened, when we closed below it, the market indicated 206.85, the May low, as a retest within, I'd mentioned 1 to 2 months, but this stock, the volatility can really it's very elastic. And if it stays as is, we could reach 206.85 potentially by the end of next week. And 206.85 is good double bottom territory, and we could actually bottom out there into possibly through November trade, and then we'll kind of see where we're at then. But I think that there is a clear potential here following this week's sell signal below the mid 260s for bearish continuation. I'll take a look at the weekly chart. Do I have it here? I do not. Oh, yes, I do. There we are. 188.13. This formation was actually tested last May. WickedStocks.com put out a premium stock pick video that anticipated that channel bottom, I might add, patting ourselves on the back just a wee bit. And we'd mentioned how it could contain selling on a quarterly basis, which it obviously has. So what am I saying here? The sell signal that remains in effect below 264.98 carries with it the possibility of 188.13 over the next 2 to 3 months. And were we to close below 206.85 in the coming week or 2 or 3, 188.13 lickety split probably within 3 to 5 days, where 188.13 can contain selling through the rest of the year. And we'll just take it one day or 1 week at a time from that point on. Let's zoom in a little bit now on the near-term outlook. I've been mentioning now since we closed below the mid 260s that this descending trend line coming off, this was a wedge formation that developed back in May, June, and July. We obviously gapped above it at one point, and that set off follow-through buying. That wasn't the only thing that set off follow-through buying, but I will mention that 237.72 is in reach today, and below 242.40. I might as well sort of finesse this in a more detailed fashion. 242.40 is just above the market, and there's a lot going on there. We have the low settlement price from Monday. We have the low of the pullback high on Tuesday. We also have if you take a look at Tuesday's high against Wednesday's low, there's a 3/8 upside Fibonacci in there, pretty close to that area. So I'm just rounding it out as 242.40, able to contain intraday buying pressures, and below which that 230.72 trend line that we came close to testing actually on Wednesday, remains in reach today, Thursday. 230.72, able to contain weekly selling pressures. And then the question begs, from there, can we expect recovery rally into the mid 260s? That may well happen. I don't see an indication for follow-through buying until we close above 249.76, which I'll get to in just a second. But first, I want to mention that if we break, for instance, 230.72 today, 225.03 is likely. And if we close today below 230.72, 217.55 is likely within just a day or two, probably tomorrow. And if we close below 230.72 by the end of next week, that targeted 206.85 level on the weekly chart here would be expected, where once again we can double bottom through the balance of October trade perhaps. So let's talk upside today, getting back to this chart, pushing or opening above 242.40. Actually, I think it's not the next chart. It is this chart here. That's the same exact chart that I showed just before, but this one includes a new, very simple channel top that can contain daily buying pressure. So if we push or open today up to above 242.40, you should anticipate 249.76. where we can place a daily high. And we do need to fall off from there into the afternoon. This is rising at a pretty steep rate. And so the point I'm making here is if we close kind of right at 249.76 without taking it out, we may be poised then Friday morning to clearly open above this formation, which would then indicate probably within the day on Friday, a retest of the mid 260s. So as I mentioned a moment ago, it would be a settlement above the 249.76 formation that would signal within a day, two at the very most, once again, the mid 260s, 264.98 to 265.60, where we can top out into November trade, and once again below which 206.85 is likely, I'll say over the next 3 to 5 weeks or sooner, possibly within 3 to 5 days if we settle today once again below 230.72. Well, here's your 217.55, just a simple trend line off these lows. I don't use trend lines very much as significant trend-defining levels, despite the fact that it says trend line. But I do like to use trend lines for, meaningful intra-week and weekly support levels, especially if they span long distances in time, as 230.72 does. So let's continue with the final analysis in terms of what if, and it's not going to happen today, but it could between now and the end of next week, we close back above this mid 260s meaningful resistance. Well, then I am off that expectation for 206.85 over the next 3 to 5 weeks. That becomes neutralized. And I think we can then expect a rally pretty quickly within maybe as little as 3 to 5 days into the 290s. And that is shown nicely here. This former channel bottom that held beautifully in early September. We called that pretty nicely on the daily Tesla report at the time. It launched into a rally that played out for several weeks. We closed below it. It held nicely on retracements for the following several days, and then we fell off. And it is at 294.80, and we have a new descending channel top coming down based in part on Wednesday's low at 298.07. So this area all comes together. If we close sometime soon above the mid 260s, this upper 290s, we'll call it, becomes a quick 3 to 5 day target where we could top out on a weekly basis, and really not unless we really close above 298.07 does 330.05 become clearly indicated. Although I will say this, and I'll mention it at the time if it were to occur. If we do manage to close above 265.60 over the next week or so, I will be mentioning this 330.05 as a likely 3 to 5 week target, knowing that on the way up, that upper 290s I just showed in the previous or earlier slide can certainly contain weekly buying pressures on the way up. But it would be a settlement above 265.60. I think then we've got 330.05 in play again within about 3 to 5 weeks, where we could top out through the rest of the year. And that's all big picture analysis. But getting back to today, and that's what I'm going to finish up with here, we're still heavy for the day below 240.40, anticipating 230.72, where we can place a weekly low. If we settle below 230.72, expect 217.55 probably tomorrow, and by the end of next week, the targeted 206.85. Upside, pushing or opening above 240.240 indicates 249.76, where we can place a daily high and perhaps fall off back in the low 230s again by Friday's close. If we settle today above 249.76, expect a test probably tomorrow of the mid 260s, where we could top out through October, and below which 206.85 remains a 3 to 5 week target. A settlement above 265.60 would indicate the 330s I showed a moment ago within about 3 to 5 weeks. And on the way up, we'd have a 3 to 5 day target in the upper 290s, where we could top out on a weekly basis. I suppose I could have just said all that from the beginning, and this video would have been all of about 30 seconds. And that's where I will leave it for Thursday's Tesla report. Please click like and subscribe and share with all your friends. Have a great day.